Welcome back to accounting. We're going to do chapter 6 as the next lesson. Chapter 6 talks a lot about journal entries, source documents, and HST. So these are brand new topics as far as you guys are concerned, and we will go into detail about these topics during this chapter. So the agenda is clearly laid out on the PowerPoint. It says that we'll talk about the importance of general journal, recording journal entries, some of the example journal entries for you to reference to as you're doing your assignments and studying for tests, and of course the source documents and how they're related to journal entries, sales taxes, which is HST, and some of the some example journal entries with HST. The importance of journal, the general journal. The general journal acts like a diary for a business. It basically records all transactions as they happen. In the only order that is used in the general journal is the order of time or chronology. So as it happens, you record them in the journal. Until now, we have really entered all the transactions directly into T accounts. You may remember that all your exercises, all your assignments in the past, you have debited one side of a T account and credited another side of a T account, of another T account. That is actually called the ledger. That is not the journal. That is a ledger, which means that all your accounts are being affected and recorded in those T accounts. So if you were to go back, it would be really difficult to see which entry actually occurred first. In the journal, you keep a record of the entries as they happen. So a journal is a book where all transactions are recorded first. This is where all your transactions are recorded with debit and credit. Each transaction is recorded separately, so you don't mix them like the T accounts, and they are recorded in the order of occurrence, as I mentioned, and the order or the journal is continuous, which means that it doesn't stop when the year ends. So it just keeps on going from the beginning of the business to the end, or if it doesn't end, it just continues. A journal entry is made up of all accounting changes in that transaction. So you enter all the debits and credits in that transaction, in that journal entry. You always record debit, which is DR. You always record that first and credit second. And what happens is, it is normal practice to indent the credit side. You don't have to, but just to make sure that you know if it's a debit or credit. I'll show you a couple examples as we go along. So what is the process? It is, by the way, the journal is also called the book of original entry, because this is where all your entries are first recorded. So you call it the book of original entries. What is the recording process? First, of course, we've done the analysis of each transaction, meaning that the transaction should be recorded or not. Where's the actual document, the receipt, the invoice, the check, the bank statement? All of these are source documents. And then we record it in a journal, which we are learning now, and then we transfer that information into T accounts or ledger accounts, which you've already done. So we're now basically doing a middle step between the actual transaction and the T accounts. These are simple steps to follow along as you do the recording of journal entries. So you enter the date, and then you enter the debit account and its amount. Then you enter the credit account and its amount, and then you may write a brief explanation. Some teachers really emphasize on the explanation. I do not, but it is up to you to record the explanation or not. It is a good practice to record it so you know exactly what happened as you went along, if you're looking at it later on, 6 months, a year, 2 years. But these days, with a lot of computer technology, it's not really a necessary step, because you can look at it from different perspectives. So what does a journal entry look like? This is what the journal entry looks like. You can see that on the left column, you have the date. In the middle, you've got the actual account that is affected and the explanation if you need to have one. and then you've got debit and credit. Debit on one side and credit on the other side. So you remember when I mentioned, you may recall when I mentioned indenting. So you can see that truck and cash, those two words are not aligned. Cash is indented because it's a credit account. And same thing with the amounts. You can see that the debit and credit amounts are actually indented. So it's completely normal to do this. It is also normal not to have the names, the truck and cash, indented, only the dollars, the amounts. As long as the dollars are indented, you can clearly see that one is a debit, the other is a credit. Okay? It's really the amounts that matter. But this is what it looks like. So instead of, in this case, this person bought, or this company bought a truck for $14,000 and they paid cash. So you see, you can visualize if there was an account, a T account for truck and a T account for bank or cash, you can probably visualize that on the debit side you would enter $14,000 for truck, and on the cash credit side you would enter $14,000. But this is where you record it first. This is called the journal. This is what you will be focusing on from now on in accounting. The T accounts is good to learn, but that's the ledger. Okay, so that's the next step. Programs, computer software do this for you. So, some of the examples as far as journal entries are concerned are listed in the next couple of slides. You can see from here that I've just given you some transactions, and I've given you some journal entries as a reference tool. You can see that there's someone buys furniture, someone borrows money from bank, someone buys computers on account, which means accounts payable, you may recall, and then of course someone pays receives an internet bill and pays the internet bill, which is two different transactions. So these are some of the journal entries that you will come across in this chapter and beyond. So I'd like you to start looking at these as examples, as your references, and when you do these assignments and study for tests. The next slide also is about examples of journal entries. You can see that these examples are, someone is paying cash for services, and then there's someone's paying cash for supplies. Someone is being billed for services, which means that they haven't paid yet, they will pay later. And then you can see that someone's receiving a bill, which means they will pay later, which is on account. So these are some of the journal entries as examples that you will go through. I would also like you to now focus on not just the journal entries, but also on how to process these journal entries. There is a program that is in your pickup folder, which is called Mirza Books. That is an Excel-based program. I'd like you to start using that. And in that program, what you will do is you will enter journal entries such as these, the ones that I've showed you, and the program will automatically take those journal entries and the accounts and the amounts of those entries and put them in different ledgers and create your trial balance for you. So you don't have to start creating trial balance, and it will also create balance sheets and income statements for you. So what you need to do is get really good at getting journal entries correct. And that is where accounting will be focused on from now on in this grade and in grade 12 as well. So as long as your analysis is correct, as long as your journal entries are correct, the rest of it should follow fairly simply. Okay? So thank you very much for listening. We'll continue our lessons next time. And as always, remember, ARTW, accounting rules the world.